Welcome back to Markets at Noon and taking a look at the markets right now because it's once again that we but amidst this volatility, which are the pockets that you should be eyeing at? And given that it's a year-ender going ahead in 2025, what kind of an outlook you should start building in? Let's try and deep dive more into that. And for this discussion, we are being joined by Jigar Mistry, who is the co-founder at Buoyant Capital. Hi, Jigar. A very good afternoon, and thank you so much for your time. First up, help us with your take and your outlook for the Indian markets for 2025, because 2024 has been a very interesting one. But 2025, a lot of these key drivers could be there. There could be some rate cuts, the new US president-elect will be there. So what is your outlook and expectation from the Indian markets?
Hi, Srishti. Thank you, as always, for inviting me to your show. I think, we need to take a step back from the overall equity, large cap or small cap, or at the stocks with long enough history. It has always aligned. The current observation, however, suggests that especially in the small cap space, you are seeing a huge dislocation, which, is something that has not really happened before. We are in the 99 ninth percentile of the observation. So if I give you some numbers, over the past, the 5-year rolling return for the large cap index, the earnings growth is tracking at around 19%, whereas the share price is also tracking at around 19%. However, if you look at the small cap index, the numbers are 17% earnings growth and roughly 34% share price growth. One of the reasons why we think this is happening, because if I take, say, November last year, November 2023, two events happened which changed the trajectory of the Indian markets. The first, Jerome Powell appeared like, the Fed, or rather, cuts. At the peak, if you remember, rate cut estimates were more than 7. And BJP fell short of majority, which was not something that was either expected by the market or one where, for the continued capex growth, you needed to pass a lot of bills, and therefore a strong majority would have done wonders. But despite that, Indian markets have, carried on. The index last month was up something like 27% over a 1-year period, and small cap index was up even higher. One of the reasons for this is that, if you look at the wealth creation in the retail space, that is nothing short of, astounding, to say the least. If I take at the lower end of COVID, so March 2020, the total retail wealth, by which I mean total of the market cap multiplied by the retail shareholding, I'm excluding mutual funds and ULIPs and life insurance, that number was at around 16 lakh crores or 16 trillion INR. In September, that number has ballooned to a whopping 69 lakh crores. So as a cohort, retail has generated in excess of 50 lakh crores in wealth in under 5 years. They are reinvesting that wealth into buying the same small cap mutual fund. We now have more small cap folios than large cap. Yeah, the AUM for small cap and large cap indices is also savings in India. If you take it around 65 lakh crores, less than 3 lakh crores or 5% is coming into equities.
Yeah.
In a couple of years, you would see this number balloon to say 80 lakh crores. And you could argue that household savings could increase to 10%
No,
coming
certainly,
into
Jigar, I
equities.
totally take your point and your narrative that yes, retail investors have been really excited about the markets. But Jigar, going ahead in 2025, will it be good to say or correct to say that the kind of returns that we have got from the small and the mid caps of the market, they have already
obviously taper down the expectations from small and micro cap stocks. But even within the large cap stocks, I think a lot of investors have gotten used to the post COVID returns. And despite all the narratives that were built out, right? As I said, between 7 to 9, real estate was the play. Then in between, you had consumption taking over in 14 to 19. Now cap goods, defense. At the end, if the EPS and share price growth have always aligned, then you should argue that EPS would go up dramatically or the share price have to come down. Now, it is difficult to make a case of earnings growing quite dramatically beyond the mean number, in which case it's only fair to say that the share prices should come down and investors should start baking that in.
Right. And which are the sectors that you would advise your investors, your clients to be in for 2025?
Right, so if I look at sectorally speaking, you look at, say, the index returns versus the profit growth estimates and look at dislocation at that point. The sectors that stand out are healthcare, the sort of financials, and some bit of small and mid caps, sort of which are very much a bottom up stock picking sort of zone. But other than that, I think most of the places
doing well. So what's your take, Jigar, on the MFI space?
Right, Shishis, I think that MFI actually goes through, multiple cycles. So I think last time around when I was on this show, I mentioned that you take the case of SKS Finance, which you can consider as the father of microfinance industry in India. And it started operations in the current format in 2001 and got listed somewhere around 2010. Now, if you take the combined profitability of 2001 to 10, in the Andhra Pradesh crisis in 2011, it lost 2 times a completely contrarian play. So, at the time when going is really bad, when even the management seems to have thrown in the proverbial towel, that's when we come in and buy those businesses, and then we sell those businesses at the time when it appears like nothing could really go wrong. So we have to be very swift while you are invested in a business like that. But if you look at sort of the mainstay banking companies, the private banks, a few public sector banks, there the earnings growth has been reasonably good over 1, 3, five years. But because of the ownership issues, by which I mean that if you look at FII ownership in India, then 6 out of the 10 largest overweights that they have are banks. So when they get out of a country, they can only sell what they own, and if they are reasonably keen on and most exposed to as a fund.
Well, thank you, Jigar. Thank you for joining us and giving us your perspective about the markets and what we can expect from 2025. Well, with that, let's slip into a short break and we'll be back with more news on the other side.